what is the one thing I need to see with an asset that's trading at a recent new all-time lows that will make me actually believe that there is a bottom? Well, even more significant than that, Hafid. But what's the one thing that I wanted to see? Volume impetus falls aligned with divs and trend lines and stuff, indicator confirmation, right? But before that, I actually even start hunting those setups to get long, what do I want to see? The answer I'm looking for is I really want to see weekly W's. I want to see some sort of anecdotal evidence that, yes, this thing has stopped making new lows. So, going back to the Beyond Meat trade, we looked at this and we were kind of like, kind of interesting. The spread sure looks attractive. Now, can I please have a W? And, I would even suggest that you even change this to like a line chart, just so you actually see whether there is a W. Because you notice, change it to a line chart, our W just mysteriously disappeared. So I don't even know whether this thing's actually bottomed yet. But what I really want to see, I want to change my time frame to a weekly price chart, and I want to start seeing bullish market structure. Speaking to the dashboards, I don't know whether, Steve, you've been watching, but I actually, when I was a commodities broker, I used to update this on a weekly basis, and I wasn't even allowed to participate in a market unless the asset was issuing a buy signal. And these markets, this system, to actually issue a buy signal, the market has to be right at the bottom end of the range, and this other thing has to be happening. And the other thing is, I actually have to see moving averages on the weekly basis pointing positively. So this is an interesting one. Weekly basis, our wheat chart, the moving averages are still positive. So if I got a W that came in here, I'd actually be okay to buy. I don't think a W is going to come in here, but I'd be okay to buy that. And if those moving averages cross, then that would actually spit up a 6 on this wheat. Corn, same thing. If I got a W down here and price started to turn back up and issued a buy signal, because the moving averages on the weekly basis are still pointing positive, actually I'd be okay hunting along on that. But if an asset's making a new 52-week low, do you think these moving averages are going to be positive? Copper actually might be interesting. Copper is really falling apart here. All right. So here you can see the weekly moving averages, the trend. This is a trending signal. Take our level 2 program to learn what the hell I mean by that. They've actually crossed bearishly. So even if I got a W here, I would not be allowed to go and invest in that. So, you want to make it really, really simple for you, Steve, but it's going to eliminate a lot of names, and you're not even going to be allowed to look at assets that are making new 52-week lows. Is put on our moving average system that sort of tells you when to buy and when to sell for investors. And we actually used to run this on the site. We haven't run it in a while, but there's no reason why we can't. And that's the S&P 500 system. And when I was working with little old ladies and they wanted to, Brian, is this a good market to invest in? Or maybe I should just, keep my money in the bank and collect the measly interest that they're going to pay me? Well, I mean, you could. Point here is we use the weekly price chart and we follow that this is that same moving average relationship. And what's fascinating here is you can go through almost every single economic cycle. Here we'll hit the rewind tape and we'll go back to the great financial crisis. And you can see there is the moving average cross bearishly right there in November 2007. So you were actually told to get out of the stock market a year before Lehman Brothers, a year before AIG, a year before Bear Stearns, a year before any of those people were talking about, the Great Short and all that. And you tell me, would that have been a half decent signal? There's the sell signal, and you're told to get back into the stock market in May of 2009. So that's like a year and a half later. Typical bear market it's 18 months. 18 months is what's that? That's 78 weeks. 79 bars. That's about as cliche a bear market as you possibly could get.